So thank you very much. I'm very pleased to be here. We have already heard a bit about development finance. We heard some earlier more critical remarks about the role of the private sector. We've heard now much more about private sector development. At ECDPM we are looking at basically private sector engagement, which I come to now is a bit different. We are, I think, in two things. So we are trying to basically facilitate dialogue, facilitate information sharing, producing knowledge so that both EU actors and African actors are better equipped and better informed about what is going on the other side. That is kind of what I'm going to talk you through, but I'm not going into detail of all of that because we have heard a bit already in the two previous presentations. So one thing we need to basically recognize that there are very different objectives. What Lukman was basically talking about was mainly the first bit, which was on really private sector development. So it was about business environment, it was about regulatory reform, it was about innovation policy. So basically issues in order to make the private sector comfortable in the market they're operating in and to provide the right incentives so that the private sector can actually operate. What I'm basically working on is the private sector engagement for development bit, which is basically trying to engage with the private sector in their investments and business activities in the different regions. We are particularly looking at sub-Saharan Africa, so we are looking at concrete examples of where the public sector is supporting private sector actors to conduct business, and ideally where these commercial objectives basically are then able to overlap with development objectives. And then the last bit is what Mary was touching upon, which is basically leveraging private sector finance through different instruments and their catalytic mechanisms. But you also have blending platforms, for example, where we try to blend public grants with private loans. Well, the context is clear. I mean, why do we try to engage with the private sector in development issues? First of all, we had a couple of sequences. I mean, the financial crisis was one, which basically left public actors, left the governments with scarce budgets. Basically, the aid budgets were squeezed, and therefore the reasoning is, and that's also part of the new development agenda, well, we need to bring in the private sector finance, we need to bring in the investment the private sector is doing. And then, of course, we heard that also in the panel debate, we're talking about value for money, so everything needs to be very efficient. There are recent policies by EU member states, so the UK just came out with their new aid strategy. The Dutch did that 2 years ago, where they're basically trying to be, it's called their self-enlightened interest, or they're trying to, by promoting all economic interests, at the same time promote development. And that's then kind of trying to hope that you can increase value for money in the program. What is very interesting, and Mary was touching upon that, is actually the way finance is composed throughout the income level. So if you look at the right side, you see that basically aid is dropping from the upper left when you're talking about low-income countries. It's basically dropping as soon as you reach the next stage in income level. And FDI is surprisingly quite constant. But the main, I mean, the important bit here is the tax revenue. So that part where basically the private sector is paying taxes where they're operating, and that is really important as soon as you move up the income level. And you also see that on the left side in terms of total volumes. That's actually where it is most important. Talking about bringing these two agendas, so kind of shifting from the old to the new development agenda, we have already heard the private sector is really becoming crucial in that. If you look at the goals, there are plenty of goals where the private sector has basically a key role to play. And the role of the private sector is interesting because it's one of, I mean, first of all, it's kind of a means of implementation, but it's also a source of funding, which is just, I mean, to give you an idea, annually you need kind of $2.5 trillion more of investments to what is already going on. and their large goals are actually with the private sector. And then in the end, it's also beneficiary by these goals, because in the end, if you make improvements in one of the areas, you automatically create a better environment for some of the private sector operations going on. We have different narratives, which is quite interesting. In Africa, people are talking about the Africa Rising story. It will be the next investment frontier, substituting basically Asia as a manufacturing hub. Then there's a different one, which I already touched upon in your agenda. People are talking about a win-win-win situations, or private sectors contributing, their commercial goals are met. At the same time, they help out the public donors to reach their development objectives. But there are also kind of risk involved, so that's about exploitation, which is always kind of referred to in the mining sector. But you also have human rights issues. You have issues of land grabs in Tanzania, for example, in the Southern Agricultural Growth Corridor. And then there's always this neocolonialism issue, which is important to consider. And probably that's also one of the reasons why we need to overcome this kind of north-south divide and the donor-recipient kind of relationship. And then ultimately, and that's also what Lukman was talking about, it's about jobs, it's about creating better jobs, and it's about creating jobs in the formal sector, not only the informal sector. And that's basically what economic transformation is trying to do. So moving people from low value-added skills and operations to higher value-added operations. But we always talk about the private sector is actually quite diverse. I mean, the private sector is, you have large multinationals, you have the small SMEs, you have micro-enterprises, and then you have them both international, domestic actors, and it also depends a lot on which sector are you actually looking at. So that is just to give you an idea, and then you have all the other actors in the donor development agencies, in some of the developing country governments. You have lots of different inwards investment promotion agencies, for instance. So you have a whole set of actors which are actually influencing the world of the private sector, which is often overlooked at, we feel. Just to come to some of the challenges, and I won't go into all of them, but probably 3 of them are particularly important. One of them, and we heard that earlier, is the results and impact measurement, which is first of all time-consuming, and it's also costly. So there's kind of a trade-off of how much money of the budget you have for a certain instrument or project are you actually willing to spend on measuring results and impact. The second one is probably the target experience, because many of the instruments donors use to engage the private sector are targeted a specific type of country, and that is related to the scalability of these instruments, because some of these instruments take place in very small environments. So you have small projects which probably work in a particular context, but they don't work elsewhere. And as you can see, I mean, the list of challenges is quite long. And exactly for that reason, to overcome some of these challenges, the European Commission in 2014, with their communication on the stronger role of the private sector in sustainable development, tried to come up with some criteria and principles. And I mean, it was kind of a good start, but the thing is, and we are trying to bring policy into practice, and if you look at this into practice, the operationalization of these principles and criteria is still very difficult. And they're very broad as well, and we don't have performance indicators and good measurement indicators to really make sure that these criteria and principles are actually lived up to. So now I'm coming to what we are actually doing to give you a bit of an idea, and a couple of more concrete examples. So we have provided input to the private sector communication. So what we basically did is consulted with European Commission experts, but also with different EU member states, DFID, the Dutch government, etc., to where that communication can actually make a difference, and where probably also some of the weaknesses, such as the criteria and principles. Additionally, we are doing once in 6 months, basically, a kind of informal donor dialogue. So the day after the private sector expert people meet on an official meeting in the Commission, we are trying to kind of provide an informal setting for them to discuss some of the learnings, what they have been doing well, and probably also to come up with some of the challenges, because they're very afraid sometimes to speak out loud about these challenges they actually face in supporting the private sector when they have official meetings and they kind of have their country head, and it's the Dutch that are talking, or the Swedish, and there we try to facilitate that dialogue. Currently, we are doing work for DFID where we are trying to look at the development instruments and at commercial instruments. Commercial instruments such as those instruments provided by export credit agencies, for instance, to kind of guarantee that exporters exporting goods, for example, from Germany or the Netherlands, are actually also getting their money. And we see that those instruments are actually not very different. And they are kind of, I mean, they're very complementary in a certain way, but of course objectives and criteria behind do differ. But we're also doing research on the business CSO partnerships, so we're trying to understand where those partnerships do add value and how they are governed. So who's leading whom is often a particularly important question to see how successful such partnerships are. We're working on regional value chains in West Africa, but also in East Africa, on corridors, and then one last point, and Lukman was touching upon that in the end. It's, I mean, some of these instruments, they only work if you have the right political economy in place. And in the end, it's about incentives, and it's about making choices, and it's about accountable and legitimate institutions making the right choices and actually standing up for certain instruments or projects and trying to make them work. So the political economy is very important, and it often is one of the main reasons why things are not working. I've touched upon that already, so just probably as a wrap-up, we have kind of two agendas: developing countries to promote their own investments through inroads investments promotion, for example, but at the same time donors of EU member states, for example, are trying to promote their own private sector. And by looking at these instruments, and that's a study coming out in the next week or the next 2 weeks or so, there are some of the findings. I mean, challenges and difference. I mean, there are similar challenges for both sets of instruments, basically, but there are also differences, and I talked about them already. But there are opportunities to kind of bring those instruments closer together and to make some of the commercial instruments actually working for development. And that's then talking about inclusive economic growth, for example. And that's probably also one of the main challenges in bringing the private sector into the whole debate. And if they feel the right incentives to kind of get commercial objectives through, but at the same time promoting some of the development outcomes they would like to see, then there's really hope for that. So increased synergy and coherence is feasible, but it's still a long way to go, and policy to practice is, as always, a different story. And then I'm happy to answer any questions after the debate. Thank you very much.